Hello, everybody. Hello, Andy.
Hello, Steve. Hello, Scott, and everybody.
All right, we got all our hellos in. Hello, hello. So, welcome to Tuesday edition of our afternoon webinars. This one is the Trade of the Week webinar, theme-based. Andy and I have a little bit of prepared content for you today, but let's get the other stuff out of the way first. The disclaimer screen reminding you all that we're a software as a service provider. We're content publishers, and so we're going to talk about our technology. We're going to talk about some opinions of the market and stocks, but really nothing should be construed as investment advice. If you're looking for investment advice, you got to seek out the guys with the proper licenses, and they're going to charge you a fee for that as well. So please don't construe any of this as investment advice because it is not intended to be. The old "you're not alone with trade ideas" slide, just here as a reminder, especially for the tire kickers who are not current users. We pride ourselves on not only the in-depth product, 14 years of technology, has many layers of technology, but we pride ourselves on helping people get up to speed quickly and shortening the learning curve. And some of the ways we do that primarily are Barry Anderson's live trading room during the market hours. He's in there trading his own account, moderating a room with the patience of Job, and demonstrating trade ideas technology. And there's a couple of good traders in there as well. So it's a neat little community, and the best part about it is the price, which is free. So, you know, I hear that our room is getting more and more popular, and the price would certainly justify that compared to considering what you get for the price. We have the afternoon webinars like you're listening to now, 5 o'clock Eastern. You know, they start Monday through Thursday. I was helping Jamie yesterday. Today is you're listening to it. You know, tomorrow will be Dan and Brad, and Thursday will be Jamie and Andy again. Friday support sessions. We've been doing these for a few months now, and they're a big hit. They've really alleviated a lot of the pressure of people seeking help and answers that need a visual or need something more than just a chat window. So 11 a.m. Eastern to 2 p.m. Eastern every Friday, we make ourselves available in the same format right here using the GoToWebinar format. And the content is open. It's basically you guys telling us where you want to go, what you need help with. So there is that. And then what I added down here at the bottom, I squeezed in Monday through Thursday is our Trade Ideas University course, 12 to 1:30 Eastern. Basically Monday, Tuesday is pretty basic. Wednesday gets more in-depth, intermediate, and then Thursday is more of the advanced stuff, but still a great way to pull up a chair and get access with visuals to support any questions you might have. And of course, after those webinars, we also go to question and answer. If you've got something that you really need to get an answer for, well, there's another chance that you have availability with us during the Monday through Thursday Trade Ideas University. All right, so with all that said, it helps keep us on the trajectory of parabolic subscriber growth. We thank you all for your wonderful comments. We see them every day. Going to start off with my favorite slide of all. We're going to talk about the machine. The machine is Trade Ideas platform, and even more importantly, the AI tool that we call Holly. And as Paul Tudor Jones so eloquently put it, that no man is better than the machine. However, no machine is better than a man with a machine. So that's us, the human being, the trader. And our machine is Trade Ideas technology. And so we're going to try and always help point you guys in the right direction how to use that technology. And I think we've got kind of a decent example today with the AI tool that happened in the first hour. We will elaborate on that. And here we are, the agenda for today, market recap. I'll spend a little time. We're back in no man's land, and I've got a few things I want to point out in the general market structure, price action. Holly recap, I alluded to that a moment ago, kind of pointing to the path of least resistance. Well, she definitely did that for us today, and we will elaborate on that. The theme of this webinar, as always, is the trade of the week. The trade of the week this week was Sienna. It did trigger on Monday to the long side, and this has been an interesting few weeks, so I think we'll take a trip down memory lane a little bit on the trade of the weeks, how they're doing, and a couple of thoughts going forward for the week. And then I've got a small bit of content here that I briefly called Life on the Fast Line. kind of a play on words from the Eagles song, Life in the Fast Lane. But I want to show you a few things. And again, of course, you guys, images, pictures are worth 1,000 words. And then I think we'll probably have 5 minutes or so at the end of the session where we'll take maybe 5 chart requests. So if you're thinking about it, be quick on the draw when I announce it at the end, because we're only going to take 5 or so. And it always helps to know if you're long, you're short, or you're thinking about getting long or thinking about getting short. And Andy and I will put a couple pair of eyes, extra eyes on the chart and maybe give you some insight that hopefully helps. All right, so let's hit escape and let's take down that for the moment and say hello to our, well, what's a good word for it? A rather listless market. I'm going to kind of go into what I was talking about last night with Jamie. It still holds true today. If I can maybe get that perfectly lined up. Let's see. Not quite, but let me try something else. There we go. Perfect. All right, guys, this is what we had to work with last week. This level, I'm going to show you this level, this orange level here on the S&P chart, the spiders, was primarily derived from the 15-minute chart. Pay no attention to that hideousness today. But what I want you to look at is how that orange line really was derived. If I can get a little bit more history, that would certainly help me. I thought I could get a little bit more history than that. Apparently not. So this is the the bottom edge of the S&P and a 15-minute chart. And this level was trying to build a base using the 15-minute intraday. And I said, if we can just get above that and close above that, well, then the bulls should be happy. Well, we did that on this day right here. We got above that line going back here. So this is a major pivot line, I'm going to call it. Not only do we get above the pivot line, we got above and closed above the blue 50-period moving average, which is starting to flatten out here as well. And we had 3 nice days of not a whole lot of craziness above the key levels that I said the bulls needed to have before they start flying their flag again. But let's fast forward and add the last 3 days. And what have we done, guys? We have basically dropped right back down into the void. Right back down into no man's land, below the 50-day moving average, below the 10 and below the 20 after today, and below all of this basing that I was really trying to hopefully show you guys. I'm just surprised I can't get that. I bet you if I go to a 30-minute chart, it'll come in. There we go. So that's a bit more of what I was seeing, all the way back here. Oh, look at that. We've got even more. So that was the level I was kind of looking at that we needed to get above. But as you can see, we have fallen right back into the range. So let me go back to my 15-minute chart where my comfort zone is, and let's go back to the daily chart. So, all was good and well back here with 3 days closing above, a nice bottoming tail, which may have wanted to portend, higher prices, but then come Friday, we fell right back down into the range. And then yesterday we kind of languished in the range, and today we took an even deeper dive back down into this range of no man's land. So not really healthy on the spiders chart there, and I will amend this declining little minor trend line, we'll call it. We didn't even really quite get up to that minor trend line before the price action seems to want to roll back over. I'm going to come back to this chart because there's something else I want to add to it. But if we look at the Qs and zoom out a little bit, I'm thinking this chart has some dandruff, Andy.
Mm-hmm.
Yeah, the only cure is some head and shoulders, because that's the pattern that's really staring me in the face, you guys. It's quite different than what the S&P looked like. This is could be pretty ominous, head and shoulders showing up after a long uptrend. Those are the ones you want to pay attention to. So not a good day in tech land. I'm going to highlight some other individual names as well and show you some other reasons why the NASDAQ fell so deeply today. Let's check in on the Dow. I drew this line yesterday in Jamie's symposium. This trend line held. Here was our 3 or 4 days above the trend line. And then yesterday and the day before, Friday, held the trend line as a base. But now we have dropped back below that trend line. So even the Dow is falling back into no man's land. honestly, IWM's been the one who's been holding up the best. The last recent high is most near the all-time high. Had a nice recovery off the bottoms today. Hasn't sunk back too far. Still above its 50, still above its 20 and its 10. So, the IWM small cap Russell 2000 is what that's mirroring, is basically telling us that the small caps are holding up the best. And I think it was Keith in yesterday's webinar, I can't recall, but he confirmed what I had said. Sometimes the junk stocks, when they start holding up or rallying or making a last gasp, that could be the ninth inning of a bull market. But not really seeing any light shows going on the upside today in the IWM. I'm just making a point that this particular ETF has held up the best out of all of them. But getting back to the S&P and the Qs, the two main indexes, we are dropping right back, and it almost looks like we may have a date with this line back down here. And I'll touch on this again because it does kind of relate to the SPXU, if you all recall, which was our trade of the week for the last 2 weeks running. And I even mentioned in the email this week, for those that want to stay on their toes, if the market gets weak, protecting the language of not being so definitive, but hindsight will tell. It'd be 2020, a possible ominous head and shoulders going on here in the NASDAQ. So that's what I noticed today. And we'll take a look at another feature of some of the tech stocks, the Amazon, Google, Facebooks, and they had a rough day today for sure. But before I move on, anything you want to add on the market there?
We're going down.
Got that feeling, huh?
Yeah, well, put it on the spiders again. Well, and you're right. That's definitely a head and shoulders, kind of a broken left shoulder there, but definitely a head and shoulders there in the Qs. And we talked about the other side of the mountain, and this is a lot of times what it looks like. And you're seeing very sloppy, very volatile action, lower highs being made, possibly a third time to knock on this, really fourth or fifth time to knock on that 200-day moving average.
Right here, yes.
And the resistance down there. So, no, I just kind of say that half kiddingly, but jokingly, but just.
Well, in a perfect world, the price actually would have got up to that declining trend line and had trouble. But sometimes I've mentioned when it doesn't even come close, like two polar opposites of a magnet pushing against each other, that could even, signify even more weakness that's in there. It didn't even want to come close to that. I don't know if we'd be having this discussion after, if we didn't have this giant down red bar today. It certainly seems to be kind of skewing things. But yes, that's what we have. And he's correct. This was, remember 2017, guys, buy the dip, and everything was just great. Well, now we're on the other side of the mountain, and the other side of the mountain can be tricky. It can be volatile, it can be messy, and you can be wrong a lot. So that's the tale of the two sides of the mountain there.
It is.
And one more time before we leave, possible head and shoulders there in the NASDAQ, and we'll save some of the intraday NASDAQ stuff for life on the fast line when we get to that later.
Yeah. The Q other side of the mountain just happened to have one more little peak there.
Yeah, this one right here.
No,
this one. Yes,
the
one. Yes, well, it wouldn't be head and shoulders without a head.
No, that's right. That's
but
right.
Back here, what we were talking about, boy, this market's crazy, but how technology and NASDAQ sure is leading the way. That lasted a few days. All right, let's see, what to next here. Let me zoom out back in on that. All right, we'll come back to all of that. So if we look at our agenda today, I think we're going to go ahead and talk about Holly. I've got one screenshot that I grabbed this morning just in case it was relevant. I think it was. Let me pull that screenshot up. So here is my morning, my local time, first trades of the day. This would be 9:37, 9:59, 10 o'clock for East Coast. But, a lot of times, if you guys watch Holly a lot, the first half an hour, 45 minutes or hour can really be kind of, feeling out the market, what's going on, especially on that gap up day we had last week. Took Holly a good hour and a half to kind of really find her groove. But for those who've heard me talk about Holly in the 30,000 foot view, one of the main things I've always said to keep an eye on is what happens if we come out and notice a flurry of directional short sells in one, 5-minute, 10-minute block, what have you. Well, that's what we had here in about a 20-minute block. We had a lot of short sells come out very quickly. And I call that directional bias. And when you see a big block or a change in the winds and the directional bias, meaning short in this case, from the AI, what I always say is sit back and watch the show, because the indexes might be getting ready to roll over and follow suit. I mean, if you think about what's happening there, the AI is identifying numerous breakdowns and short triggers that have high statistical probability under the surface of the indexes. Well, once that starts to happen across the board and Holly picks up on a few of them, well, it's kind of rational thought that the indexes would probably start to follow suit. And that's exactly what happened today. I mean, the NASDAQ kind of came out of the gate on its heels. S&P gapped up a little bit, but then right here is where the selling started in the market, and we never really recovered in terms of a directional bias from then. The second thing that I'll note that was at risk on was holding its own pretty much all day. And when you have the trades, as you see here in the risk on column that are winning, we can pretty much see that the downside short version, or sorry, the short direction, essentially was where the alpha was being produced today. And if you combine that with the risk on thought, which is not getting out too soon, keeping risk on the table and seeing if these trades can work into the close, well, that was definitely the order of what happened today. We don't see too many days like this. I mean, we don't see too many days on the chart. Few, now they're in there, the big red candles, but it was really nice. I got to tell you guys, it was really nice to see Holly immediately kind of identify what was happening in the market today, and showing the path of least resistance was to go short, or at least be careful with your longs. And not only that, not holding them for a little longer than you might normally, into the close, definitely produced some results today. So that's my high level view. I'm going to kind of turn it over to Andy for more specifics.
Yeah, just go ahead. Let me go ahead and just take the, hold on just a minute here. Let me get, yeah. Steve, I'm going to take it. Do you hear me there?
Oh, yeah, go ahead and take it.
Sure. Okay. I wasn't sure if you,
I was waiting for me to click on something. I wasn't sure what you wanted me to do.
Oh, no. I was just waiting for confirmation there that you didn't mind. All right, guys. Yeah, Steve talked about the kind of the high level view of Holly, and now we're just going to go over a few trades, because I've been highlighting this a lot lately, guys, and there's been some really good risk, even in the risk off, guys. I've been noticing a lot of the trades are pain free, which means Holly calls them out, and then that just basically works in your direction. And I've been seeing this more and more lately, and that is the kind of trades you want. I mean, those are the easy ones. Nothing easy about trading, but give me the ones where I can enter and never see any red on my blotter. That is beautiful. And I think in our last week, in our Trade of the Week webinar, I gave examples of 5 stocks that were pain-free. And going to go over a few more here. The CIFS, which was the big winner today, it was a target hit. And a beautiful trade there. Here's looking at the daily. And let me just zoom out a little bit so we can see it clearer there on the daily. Stock that had been kind of trying to bottom out, finally made the turnaround, but getting tired, and Holly picked up on this really quick this morning. And you had about 5 up bars, and then look at this beautiful, when you had a bar reversal there, that short there at 26.41. And there you have it, guys. This was one that target hit really soon, and then the rest of the day, let's say, we always say take half off, or $1. That's what we used to call it. Anytime you get a stick, in the when you're trading, that's good. I mean, so I don't blame people who just take that $1 and move on to the next trade. I'd understand, but for those who want to hold on for more, especially if you're seeing the action continue lower in the overall market, maybe you take half off on that stick and then just ride it out. And even, you can see the risk on profit there was $1.64. Let's take a look at this tech. And these were one of the ones that Steve were talking about that kind of showed that directional bias in the early morning. You can see both of these are right around in the 9 o'clock hour my time. So here's tech. And once again, on the daily there, you have kind of a stock that's getting close to lows. Holly points it out right there as it breaks through this low of this prior bar. You see your 2644 is the entry there, and just wow, beautiful action. Look at that on the 15-minute chart. You really don't even have a bar reversal till down here, and then of course it just keeps going lower. So 48 cents on risk on, then you had another 87 cents on risk off. Obviously today, and guys, on a lot of these shorts, the risk on was the theme of the day. Sometimes hard to do. I know shorting it's hard to stick with those trades, especially the market we've seen over the last 8 years. So that's why we always say maybe peel some off. Let's take a look at a couple of more here. UAL, Holly got out for reduced risk, but once again, you can see the stop was actually kind of tight for a $70 stock. But nonetheless, never stopped, never triggered. Holly got out for a small loser there, but this is one you could have kept your eye on. Maybe if you got out for Holly and it did break down through this level again, maybe you get short. I can see you got a kind of a void, void there. Not a whole lot of support right here in the chart. So that was, once again, a beautiful trade. I really love this one right here, this downward dog. Now, unfortunately, Holly did get out for profit save, but just looking at this chart here on the 50, well, it doesn't really, let's put on a 5-minute real quick so you can kind of see it better. And yeah, there we go. So there, that looks better right there. So you had some action this morning where it really jumped down and then bounced back nicely. But look at this entry here where she kind of entered right here on the sell at 37.45. Now she got a little bit squirrely, and the action got a little bit squirrely right here. But once again, nowhere near the stop, nowhere near from really even putting any pain. You're only talking about maybe 10 cents against you at the most. And then it rolls, well, I should say that because she got out for 12 cents, so she probably got out at the top of that wick right there. But then it rolled over there, and looking at the daily on this one, this was kind of a pretty picture there. Falling down, that was a huge kind of support area that Holly gapped down below. It's kind of a gap and go. It did bounce back and give you an opportunity to get short. So that was a pretty good one right there if you had the guts to maybe sit through this little area right there. But anyway, an impressive day. I could go through more, guys. I'm not, you guys can see the blotter over there and the risk on, risk off. So, but Steve, yeah, I was really impressed with Holly today. Mostly shorts, and we thought, this is where Holly could get a lot of her value because she's unemotional, guys. And when you're coming in, you're looking for bounces, and you see Holly throwing out mostly shorts. Now, she played a few longs. Most of them were in the morning off a strategy called Sunrise Mover. But other than that, she was pretty much short for the majority of the day. And those are the trades that were working. So when you see that, it can kind of steer you in the right direction. Like even if you don't like shorting that much, maybe it'll keep you out of going long. Some things.
Yeah, what Andy's touching on there is anything we can do to detach our emotions from our trading decision-making process is good. And what Holly is showing us here today is that you are always sitting next to a statistically unemotional, statistically probable tool that's going to be sending off trade suggestions to you only if they meet the criteria of being statistically probable. And when we start to deduce, other things like, numerous shorts coming out at once and the market starts to roll over, we start to get a feel for our little trading assistant who's very much unemotional. And Andy's correct. Everybody has been conditioned to buy the dip and to go long. Green is good. New highs are good. But jumping in front of a green high at a level where there was resistance and then hoping it goes down, that's something foreign to a lot of people. And so, like Andy was saying, we're really hoping that Holly kind of helps nudge people and move them in the right direction. And today was one of those days where, if you're paying attention, you got a little bit of crystal ball action as to what the path of least resistance was earlier in the day. All right, Steve, you want to? Sure, send it back over, whatever.
Alrighty. Okay, well, I shall do that.
All right, thank you. And I will cue our intro music for the next segment. because we are going to talk about life on the fast line. Now, be quiet, Eagles. What is the fast line and why am I doing this nonsense? Well, the fast line is something that Andy and I coined a long time ago. It's a moving average and it's the 10-period SMA. And you guys might notice I've got, the 200 because that's now in play over here on the daily, and I've got the 50 and the 20 in red, but I've also got the 10-period on the daily chart. Well, when it comes to my intraday chart, the only thing I need is a 15-minute chart and a fast line. I call it the fast line because it's the fastest equation of all of the simple moving averages that I use. And I'll show you how to do this in a second, but let's see the value of it first. So today we talked about major tech destruction, right? The fast line, or the 10 SMA on an intraday chart, is what I also refer to as the momentum line. And momentum, as Isaac Newton says, is an object will remain in motion and it will stay in motion until it is no longer in motion, or something along those lines. And that's momentum. And stocks can have momentum too. And they can have momentum for a certain amount of time and then disappears and it dies off. But the main tool, the main guiding hand that has always helped me over the years, whether it's going long or going short, and of course today going short is our example, the momentum line was showing us that started yesterday. There was a lot of deterioration into the close yesterday in some of these tech names, and look at what happens with this 10-period moving average. As soon as the price touches it here, and here, wicks through it briefly here on the open, because this is the open today and we have volatility on the open. What I'm looking to avoid is a candle that's closed above. It's okay to be above it for a few minutes, but usually it comes back to its senses. Got kind of close to it. Look, Facebook tried to bounce here midday, but the fast line said, no, we're not ready for you yet. The guiding hand is going to push you lower. Look at here and here and here and here and here. And then towards the end of the day, it couldn't close above. It wicked above, but it couldn't close above. Had a little puke at the end of the day, and then a kind of a market maker settling up. A lot of green candles at the end of the day. So that's one example of an object in motion all the way back from yesterday is staying to the downside direction until it breaks and closes above that momentum line, or the fast line. So for people who like to trade the action and you're trading a day trade type style of a momentum stock, I highly recommend you try and incorporate this. I mean, let's look at some other examples here. Google from yesterday broke below and then broke below yesterday, and look at the close, it tried to regain it and it couldn't. And we gapped down, and this moving average comes into play so beautifully a lot of times, whether it's a gap up or a gap down. The price action will do its thing on the open, and then it's just going to kind of wait and see what the fast line brings. And look at that. The bounce in Google was perfectly stymied by the downward sloping momentum line here, and then again here and here and here. We did post a close barely above there, but we got in towards the the end of the hour, starting to get a little bit of back and forth, which is typical for end of day. Look at even Netflix broke yesterday morning, and at the close it could not bounce. The guiding hand, the fast line, held it down, opened back up, and it happened again. Tried to bounce midday, got a little bit above, and the fast line threw it back down. So I mean, I think you get the gist. There was a lot of that going on today in the tech stocks for the most part. Apple started the day nicely and then could not get back above that momentum line. So the way to use this line is anything that's going to be in momentum, and certain stocks like things that might be coming off the extreme volume high-low pro, I would consider these types of things momentum. Let's see if we could find something interesting. Okay, I just pulled this one off the top of my head. AXTA was getting weak midday. It was one of the last ones to come through. But look at what happened here. It was going sideways, sideways, sideways. As soon as the declining 10-period moving average caught it, threw it back down. Tried to rally, caught it. Moving average, threw it back down. So this was a momentum stock all day long, as guided by the 10-period SMA, simple moving average. So I hope you guys see the value in that. It shows up all the time in many different stocks, but it doesn't work well for stocks that are just languishing in a range. It works well for stocks that are in motion, especially stocks that gap up. And a lot of times a gap up, you might notice if you put this average on there, I'm going to show you how to do it in a second. A lot of times the price action literally is waiting for this waiting for this moving average to catch up and becomes the hand that supports it and pushes it higher. Thousands and thousands of examples I've seen over the years that make me a believer and make my 15-minute chart pretty clean in terms of indicators, except for one and only one. So that begs the question, how would you add that? Well, if you're on the latest production version, 4.2.25, I don't know if you have it, so you'll want to get your hands on the latest beta version. In the latest beta version, if you right-click inside of a chart window, you can see that we have indicators that we could add. We can add exponential moving indicators, RSI, simple moving average, volume, or whatnot. So you'd want to go to simple moving average, and you'll probably only have one of these in your window. Essentially, it'll start off, I think, as defaulted to SMA 20. All you need to do is change that field to a 10, modify the colors to what color you'd like the actual color to be, and then you could click OK and go ahead and launch that. But I've already got one, so I'm not going to launch a second one. So that's how easy you can use the 10-period SMA. Did you want to say something? I'm sorry.
Oh, no, just before you go on to the next topic, I saw something that I wanted to bring to their attention.
Okay. Well, I think I actually jumped topics, but we'll talk about that in a second. But go ahead.
Okay.
What did you want to talk about?
Pull back Facebook and kind of pull out the daily chart a little bit. I wanted to give them idea of when you're looking for shorts. When you're looking for short setups, this is a really good example. If you look back in late March, how it sold off, and then it's had a nice bounce, but look how it's still below its 50, still below its 200. So those are kind of longer term.
Never got back. Never got back
to them. Okay, so you have a stock that's basically came to a level and it's kind of tiring out. It's having a hard time going higher. And then look how it opened this morning and broke that 10-period moving average. Now, granted, the market had a lot to do with it, and also there was some other news that came out on Facebook. But when you're looking for short setups, that's the kind of stuff you want to look for. Stocks that have already broken below major averages and then bouncing up and starting to basically fizzle out and looking like they may want to roll back over. That's a textbook short, if you're, and not just for. I'm thinking more about swing trading, guys, when I talk about this. Obviously, you can do it for day trading too, but I just wanted to kind of imprint that for you guys.
Well, Andy brings up a good point. You don't want to pull up Facebook and just get focused on this. This doesn't tell the story. Right. The very first thing you want to look at, and that's why I have my daily chart on the left. I'm a Western reader. I read from left to right. I'm starting at the higher version, and then I'm zooming in. I would be probably completely out of sorts if my charts were arranged like this my whole life. Start with the daily and then zoom in and drill down to the intraday, and that kind of gives you the bigger picture and helps give you more confidence on what's happening on the intraday chart. And I think what happened was, Andy, I was so excited to play that theme music that I jumped ahead. We should have gone to trade of the week.
Oh,
next.
I thought maybe, yeah. No problem.
I was so excited to play the Eagles.
Hey, that was a nice touch, I have to say.
All right. So let's downshift and back into the trade of the week. All right. We'll start with this week and then we'll work backwards. So again, guys, other side of the mountain, like we've been talking about, this was a different animal back here, calling swing trades to the long side every week, try and find a nice new long, and then we broke. And the idea was to try and not get people into trouble, and that also, allowed a couple of weeks where we had a trade that didn't trigger. But let's get back to CN. The reason I brought that up was, I felt like we had a couple of shorts, which we did, and I'll touch on that. We had a couple of no triggers that didn't trigger. We've got a gold miner stock that's still working pretty well. It had earnings, but it's looking like it wants to follow through and make some highs tomorrow. There were some silver miners that were looking interesting into the weekend, but we didn't want to go with another silver miner. So basically it just said, what looks good on all time horizons? That would mean probably something that is trading relatively strong compared to the market, The example that Andy just gave of Facebook looks nothing like Sienna. Sienna is above its 200, above its 50, above its 20, and was above its 10, and was riding nice and pretty, just kind of sitting like a bird in the palm of your hands, I say sometimes. We used to call it the launching pad. But the problem is the market environment. If we had a buy the dip market and fear of missing out and people buying on the offer, hands over fist, buy, the Sienna might, be doing really well, but we don't. We have a market that looks like this. So I'm actually pretty happy with the way Sienna turned out.
Oh, yeah.
Again, I was trying to go back and say we didn't want to call another short. We didn't want to call cash, go to cash. We want to try and find something that worked alongside and, pray for some higher prices. But, considering that this right here pretty much yesterday's high, or basically there's our green line right there, is the entry point. We've been in the money pretty much all day. Yesterday it triggered early, got caught in a downdraft, but sometimes you actually get a little lucky. My friends, the analysts out there, had a couple of nice things to say, I think, about Sienna. And additionally, Sienna does not have earnings. It had earnings on March 6th. So a lot of the stuff that was showing up still had earnings in 7 or 9 days. And that's not really what we want to do either. We'd like to have stocks, move higher on a long call on their own merits, not have to roll the dice into earnings. So Sienna was the call. The reason was relative strength. It basically was showing up on our scan called above all moving averages, which in fact it was. When the market was not looking so hot. But those of you who actually read the entire email that goes out on Trade of the Week, I did mention for 2 weeks in a row, SPXU was kind of our fail-safe, in case of emergency break glass trade if the market did fall, and it never really triggered 2 weeks in a row. But I mentioned that, the way the stock gods work, it's quite possible that if we do have a downdraft of selling this week, well, this trade should still be on your radar, guys. There's no reason that you would take it off. And the orange line would be the level in the SPY. What you don't want to do is take SPXU and start drawing lines on this chart. This chart means daily chart it's skewed, all right? I think the example I used to use, Andy, was like going to a funhouse mirror, right? Mm-hmm. And you're looking at yourself in the fat man mirror and it's all extended. That's what these charts, because they're double, triple, inverse ETFs and they reset every night, which means they have a component which is called decay. And decay is basically ETFs that are doubles or triples or inverses, and they have to reset every day. So we can't go off of our lines on this chart, but what we can do is go back to what the SPXU triggers off of. It's a vehicle of the S&P 500, and therefore the bottom of this red candle right here, that orange line, is in fact still in play for those that are interested and aggressive and might want to jump into some heart-pounding type of action. If we take out this orange line, look at what we got here. It's basically a head start that was held back here, held by the bottom of this line, but it's a head start to go and tackle this little cleanup mess down here, which didn't last very long. It was more intraday type stuff. So if we break this candle right here, guys, SPXU would be in play, in my opinion. And again, that's the daily chart, so we don't really want to focus on that. But ideally, if it did come into play and the market broke down, back down to these levels, you'd be in the money pretty quickly. So just consider that an option if it does, in fact, show its head this week. Support, Bruce, the support in this one is where the buyers stepped in, and if we just look at the candles, we can see a buyer stepping in this general area. It's not an exact science, it's kind of a general area. The 200-day, this is the 200 line moving average. For the most part, price action was really focusing on that as kind of a catalyst for making that general area, the general area of support. A lot of institutions, they look at that 200-day moving average really closely. 200-day moving average, Bruce, is 200 days of trading averaged into one simple line. So when the lines are sloping up, that means on the whole, the average pricing is sloping up.
Oh, he's asking what he's asking what the 200-day moving average is right there.
Well, the 200.
We're real close to it.
We're well, it's this one right here. So I'm looking at the top of my chart there. SMA 200 looks like
266.80. No, wait. What am I at?
Oh, yeah, that's it. 268.60.
Okay.
Is that it? Is that it? Wait a minute. 26.
I think you have your numbers wrong. I don't see two. Oh, there it is.
I got to eyeball this. It looks like 260.46 roughly.
Yeah.
Yeah, the trigger, okay, so the trigger, Bruce, basically is an SPY trigger of, let's call it 258. You know, the low of this candle, let's get the real number. The low of this candle is 258. It was
Yep.
right here. If you focus your eyes right there on my chart where the arrow is, I'll go back and highlight that. 258. So 258 is your bogey. For those of you that have price alerts, you know, maybe you go in and you down right click, create a price alert, 258 right on the screws. And third time's a charm for SPXU would be the note to myself. So I'm actually setting that alert as well. I think it's probably a wise thing to do at this point. All right, so that's the trade of the week. It's been a little bit more sparse than it was back here, but back here we had a different market, guys. We're trying not to get people into trouble. We're trying not to get wicked in and out of things in reverse. You know, the mandate pretty much is to try and find things to go long. We recognize that not everybody is comfortable going short, nor is their IRAs or their self-employed IRAs or retirement accounts allow them to go short. But every now and then, it might behoove you to brush up on the vehicles that will go up that you can buy in those accounts if the market does get weak. You don't have to worry about trying to find an individual stock to short. You can just ride the wave of the down wave using something like SPXU or SQQ, which does the same thing but monitors the NASDAQ. All right, so that's it. I think that's all I have to say for the trade of the week. I mean, we know how we selected it, just trying to find something that was, you know, strong on all accounts, something that didn't have earnings too close to the upward horizon, and try and keep people out of trouble. And that was the reason for that.
Something we might add, guys, and just like man and machine, you know, so guys, you're in control here. So if you are in this trade and the market does decide to go to those levels we were just showing to you, you know, maybe this is where you want to take control and draw some lines and say, well, I'm going to tighten my risk parameters up. I'm not sure exactly where the stop on this one is, but you know, if I'm in a downward market that's really getting beaten up, I'm going to look at that, what line he's drawing right there, you know, and that may be the line. I don't know, Steve. Is that the stop?
First, no, I think actually the stop is the actual smart stop down here.
So this is where you might want to tighten things up if the market does, you know, continue to get clobbered.
And what do we call that when Holly does that? We call that
reduced
risk, because things have changed. Things are not working the way we like them to. Okay. All right, so that's kind of the genesis and the idea of the trade of the week. Yen, if it holds up, great. If the market starts to get ugly and to the downside, 258 is your bogey in the SPY, which could trigger a long side trade in SPXU, and you basically just got to take whatever price that is at the moment that SPXU is offering. All right, so we got 5 minutes or so, moving along pretty quickly. So if somebody wants to maybe do some chart requests, we can accept, we can take a look at 5 of them before we head out. Is it better to trade SPY? Well, Bruce, you can go ahead and short the spiders, but if you've got conviction and you want a little bang for your buck and a little extra, you know, octane in your tank, that's when you would go to the doubles or the triples. They're more of a day trading vehicle, like I said, because they reset every evening and they don't really mirror them perfectly on the daily chart. But, you know, it's an intraday, put your foot on the accelerator, I've got a lot of confidence type of vehicle that people use. All righty. So has anybody put in a request yet? We've got open floor for whoever wants to get some eyes on a chart. Give us a symbol and we'll take a look.
Christopher, no, don't do it.
Don't take your eyes off the wheel, Christopher. 11 people, 11 teens die every day from driving and texting. I know you're not a teen. I know you know better. Okay, here comes. Oh boy, we got some commodities coming.
Okay.
All right. Let's go ahead and close the door. We got 1, 2, 3, 4, 5. We can take one more. The first one is Bruce, and I typed in the wrong box. The first one is gold. Well, it's kind of hard to see on this chart, this daily chart, but you know, gold really is kind of holding in there. If you go to a weekly chart, which I can't do on here, you'll see that it has been breaking kind of a major downtrend line. don't think I have it here either. I could try and bring it on because of the weekly chart. Let's do this. Let's just see if we can get a weekly chart on GLD, and you can kind of see what I'm talking about. You don't have to take my word for it. All right, so I'm going to type in GLD and go to the weekly. And there's the weekly. Okay. So this is kind of a trend line that's been drawn through there. Gosh, we're right there, honestly. That's one way we could look at it. We could go to the monthly, and we could possibly start drawing lines like this, which are probably more interesting. Gold is really close. It's knocking on the door, Bruce. And I'll tell you what, Bruce, if the market starts to fall out of bed, flight to quality, flight to defensiveness, to safety could be attractive for gold buyers. But when we go back to the daily chart, it's kind of hard to see that. Kind of hard to see that in the dailies. We're knocking on the door, so I would say it's a safe bet that these recent highs up here. I'm going to set an alert.
Yeah.
Gold!
That's a big level.
Exclamation! That's our bogey right there. Okay. Now the funny thing is you can wake up and gold could be right there tomorrow.
Exactly.
Like a cat, like those cat videos where they sneak up on you. You turn your back and he's right there. And the same goes for USO and the other commodities. So that's my thought on gold. The next one was Microsoft. Microsoft got taken to the woodshed along with the other tech stocks today. Got real close.
Holding up well
just 4
until
days ago.
Yeah.
Just 4 days ago, got really, really close. So let's see if, this big down day and these moving averages here can kind of put a bit of a halt. I'm eyeballing stuff here, but here's a gap there. I wouldn't want to see it fall too much lower than that intraday, and ideally maybe bounce back up and try and regain itself. Then you got yourself, a possible cup and handle type of action going on there. Next one is FSM. FSM. Let me just grab Fortuna. Silver. See, you were seeing what I was seeing there, seeing some silver mining action, which, by the way, is kind of funny. Like I was just talking about a cat sneaking up on you. Well, it can do the opposite. Look at what silver was doing really nicely last week, and then all of a sudden you're gone. You're back down here. So the lack of overnight control, because silver, gold, and oil and treasuries. They trade a lot more volatile than the futures, the indexes will, and so you lose control trading the golds and silvers and oils overnight. I will just give you that caveat for sure. But back to your individual one, FSM. Nice pullback. It's riding its trend, certainly making higher lows. Really nice base that it came out of there for sure. Look how it corresponds over here. So at worst, it could try and come back and retest this level. I hope it doesn't. At best, it's going to hold this 10-period moving average on the daily and maybe try and build off of that. Again, any weakness in the market could hold good for miners. And my name is Steve, Bruce. Could hold good well for gold miners and such. All right. I passed one up, and it was another one for Afshin. TVX, I don't know if I can do that one, but USO is one that I passed up on. Again, a commodity that could very well creep in the middle of the night. USO had a really nice breakout from here. Notice how it came back and tested that breakout. It became support, and now it's on its way. USO oil is, unfortunately, for us drivers of combustion engines, is looking very strong, okay? The 10-period moving average is doing its job on the daily, but that's not to say that it could slip down here intraday and try and fill this gap and run some stops, but this is a very healthy looking chart for sure there, Bruce. TVIX, this is a tough one. Again, I'm going to go back to what I was saying earlier. SPXUs and all of these other crazy ETFs and levered inverses, there's really not much that you can garner from looking at these things on the daily, so I have to pass on TVIX. I'm sorry. Let's see here. That person looks like they have left the room, so we'll forget that. Let's finish with Facebook and Apple. And
no, he hasn't left the room. Remember, that's his name. That waiting for name 800. Yeah. Let's go ahead and take a look at it. Yeah.
I just screwed my whole thing up here. waiting for. He says offline. Expand that, Andy. It says
Oh,
offline.
okay. Okay.
Offline means offline. Means no soup for you.
Okay.
Okay. So we'll finish with Facebook here, and Facebook and Apple. Andy, I think, if you missed it, Bruce, Andy gave a great synopsis. Support, 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 as I draw the line across. Became resistance, resistance. We could not get back above the pivot line. The orange pivot line is now controlling the destiny of Facebook. This is a very ugly looking chart in my opinion, and don't get me started on the company mission statement. Not a good looking chart, and I might even be biased when I say I want it to fall more. Apple, well, Apple took out some major support today, and we'll see if it can buy it back tomorrow. If it can't buy it back tomorrow, well, then it might have some work to do. This particular line goes back to here, where resistance was showing up. The orange line is being manipulated by me. I'm just kind of, directing your eyes to it, Bruce. So the orange, perfectly. Look at that resistance right there, perfectly. Fast forward, a little bit of support there. Perfect support right on the screws. This day right here, this day right here, this day, this day, this day. That's the anatomy of a pivot line, everybody. The problem with Apple is it closed below its pivot line. There might be exception for the case where it trades below on the morning, runs the stops. The buyers jump back in and push it back above the pivot line. Apple did not close above its pivot line, so Apple, as well as Facebook, are under some pressure. And we'll just kind of end with that image in your mind right there. The Nasdaq's having a hard time. Could be head and shoulders land as well. All right, that's all we've got for you guys. It's 5 minutes to the top of the hour, so let's bring Scott in. I think he's got some announcements he'd like to make. Come on back, Scott.
Hey. Yeah, so we have a podcast, and hopefully everyone's subscribed. If you're not yet, just search for that in whatever application you listen to podcasts in and make sure you're subscribed. We had a new episode up over the weekend, and it was a good one, so download that and then get ready for the next one that comes out this Friday. So stay tuned. We have a code for you, and it's good this month. Oh, we can talk about the book too. Is that the next?
I always click on the I always click on the link and it goes to it. Go ahead, Scott.
Okay. Well, there's a book, and Steve and Andy helped write it. So get it. Trade-ideas.com/ebook. It's really good for this current market situation we're in with the craziness. Get some tools in your toolbox so that you're not trying the simple buy the effing dip, because it's not going to work really that much anymore. Get in on that. So spring savings, that's good to the end of the month. Saves 15% off your first month or year of any new subscription. You can also use that to upgrade from standard to premium. So go ahead and do that. If you have any questions, email us, info@trade-ideas.com. Or go ahead and follow Steve on Twitter. He's Today Trader. Jamie Hodge is at QuantBot. Follow their wisdom. You can reach out to them directly by email, steve@ or jhodge@. Thanks, everyone. We'll get a recording of this up later on tonight or tomorrow. Have a good one.
All right. Thanks. See you later.
Yeah.
Bye-bye.
Thanks, everybody.